All right, guys, so I want to update on Carvana CVNA stock today. 6% down move, 5-point move, and you can see the levels on an hourly chart what I was watching. So of course I did make a video before they've reported earnings, and after that we haven't updated. Well, here's what I'm watching. So this is what I look at when I'm day trading. I know there are a lot of lines, but any of these blue lines represent like support resistance levels that I'm watching. So today in the morning I was bullish if stock got back above yesterday's highs, which did not happen, and I was very focused. You can see I'm gonna bring up the volume bar so you guys can see it. First hour, maybe half an hour, 1.6 million volume, and that wasn't super convincing to me considering how it was moving yesterday, and even like throughout the normal, like during like choppy hours yesterday we had a significant volume. So, and after watching this rejection candle on an hourly chart, I said okay, so it probably will take a break. And then I was watching throughout the day this 75, basically 76 level as a support. So kind of close below it, but we will see. It's not really big of a deal if Carvana comes back down to 70 and maybe even all the way down to 62. But I would really wanted to see this name push back above this 82 and basically squeeze all the way to 100 this week and then flush down, but we will see. So I just wanted to show you guys, if you guys don't follow me on Twitter, a couple days ago Carvana on 26th of February, basically after they reported earnings, Cares Day Capital. So there are a lot of short sellers on Twitter nowadays, and these guys reported that they're short shares, and they highlighted a lot of stuff, which is, I mean, technically true, but when you're trying to trade, you don't want to stand in front of a like train that is on a speed, right? You want to let the stock roll over. If you're a short seller, this is one thing that you should remember. You never short a stock when it's going up. You short it when it cracks. I heard it somewhere. I don't remember who said it. Maybe if you know who quoted this, but you short it when it cracks. You never short it when it's going higher and higher. You let it crack and you have a better odds. Another thing I want to show you guys here is implied volatility for Carvana. So IV yesterday, a lot of people might. So let's take a look at just one particular case. So Carvana came down today, right? A lot of people, I mean, I'm mainly options trader. I don't trade shares. Carvana came down 5 points, right, today. And here's the contract. $70 put, weekly put for March expiring in 2 days. What it was doing yesterday, which I added to my watch list just to keep an eye on implied volatility. I did trade yesterday calls. I walked out with like very small trade. Made money, sold it, and added this put into my watch, not to buy, just to keep an eye. How calls, because I had a bunch of call watch list, 85 call, 90 call, 95 call for this week. And you can see after stock pulling back so much, look at the IV. That's called IV crush. I mean, look at the price of the contract. Contract did not move at all, despite, it doesn't matter whether you bought it in the morning or after the, yesterday. So I can see, like in the morning, yeah, we did have a little bit of a volatility, but as soon as 8 p.m. Western time, they kind of like switched off the volume, and look at this choppiness. It did come down, it did drift down, but with what kind of volume? There were not people panic selling. There were not people who were short covering it. I'm gonna show you short volume here as well. It's not 100% going to match because yeah, I have in the past when I was streaming, I have shared many websites, cool websites that were free. They became paid, and then even like, especially like when I was trading Neo publicly live, there was a really cool website where I could see institutional hedge funds, Goldman Sachs, like all big guys, their option trades the next day, right after every single day they were publishing it, and that site disappeared. So I'm careful with what websites I share here, but hopefully these guys are not too, I don't know. But hopefully, if it happens, I'll just, any tools that I'm going to discover, I'll be just taking screenshot and I will not be sharing the website. So the point here is daily, they report daily short volume. I don't know where they get it, but they say here as well that FINRA, stopped, CBOE stopped sharing daily short volume. You guys know why, right? I mean, nobody in who market makers, they don't want you guys on Wall Street bets squeezing the hell out of institutions after GameStop, especially. But they were publishing short float every single day, and they're still publishing it. And today, 28th, 46% of the float was short. Yesterday, 49%. But before that 2 days pop, you can see like short float, percentage of total volume. Okay, that's what it is every day. Okay, it's not a float of the short that people are rolling. It's just that particular day on 20th of February. 67% people were short, 60% short, 63% short. So short volume was very high, and a lot of people got squeezed here. But I don't think it's over, and it doesn't matter. They're fundamentals. When stock is moving like this with the momentum, you can just throw the fundamentals out of the window for the time being, okay? Because if a lot of people buying calls and puts, especially calls, there's something called gamma squeeze, and it can basically force a lot of market makers to hedge themselves and just buy shares, okay? And when they don't need it, they will sell it. They will just dump it. But the point of this video, I'm basically watching Carvana to the upside, but for me, 65 is very crucial. It has to stay here. But I really wanted the stock to stay above, especially going into Friday. But if it does get back above $80 tomorrow, I would watch volume, especially hourly candles. So volume is fading. It doesn't mean anything. It doesn't mean that people are panic selling. It doesn't mean also that shorts are panic covering. I want to see shorts to panic cover first. That I want to see that exhaustion like move to the upside first before I short the stock, because I know eventually it will come down, it will dump. But before that, I want to just see that squeeze, real squeeze, where you can see people are publicly announcing they're short on top of it, but it's not even moving the stock. It's not even like, it's not doing anything, because a lot of people still buying puts and calls. But put to call ratio today, very institutional trades. Same amount of calls were traded versus puts. 70,000 calls traded and 67,000 puts were traded. But I want to see implied volatility crush, but I'm watching Carvana from here to the upside if we clear $80, $82. So that's the video. I don't want to make it too long, but if you guys want me to make these videos often, please subscribe and just comment below, because for the most part I'm doing these videos for myself, and even these tweets that I tweet, it's for myself, actually, to improve myself. I don't sell anything. I just can't go back, because every time I tweet something or I just look at the stock publicly like this and publish it on my YouTube, I'm very unbiased and very objective, and I can go back to look at it to trade off of myself when I'm alone trading. So that's the video. Thanks for watching. See you in the next one.